The markets are a bit shaky today.
Investors are nervous about several things.
Like what?
Well, the personal consumption expenditures price index is coming out soon.
Right, and that's the Federal Reserve's preferred measure of inflation.
Exactly.
What else is spooking the markets?
The possibility of a U.S. government shutdown.
And of course, former President Donald Trump's tariff threats against the European Union.
All those things are adding to the uncertainty.
So let's unpack this, starting with the PCE index. Why is it so crucial?
It gives us insight into what the Federal Reserve might do with interest rates.
Okay, so the Fed is watching this closely.
Very closely.
And we know U.S. consumer prices rose at their fastest pace in 7 months in November.
Which has some people worried that inflation is heating up again.
Is that a valid concern?
Some analysts think Trump's policies could actually make inflation worse.
Interesting. And the Fed has already scaled back its projections for interest rate cuts in 2025, right?
Yes, down from 4 to 2.
So they're taking a more cautious approach.
It seems so. And a higher than expected PCE reading could really rattle the markets.
Let's move on to the potential government shutdown. Why is that causing so much unease?
Well, the failure of that Trump-backed spending bill in the House of Representatives is a worrying sign.
Definitely not a good sign. What could a shutdown mean in practical terms?
It could delay paychecks for federal workers and hurt economic growth.
How much of a hit are we talking about?
Goldman Sachs estimates each week of a shutdown could shave 0.15 percentage points off quarterly GDP growth.
That's significant. Okay, let's talk about Donald Trump's tariff threats against the European Union. Is this a serious threat?
It raises the possibility of a trade war.
What exactly does Trump want from the EU?
He wants them to reduce their trade deficit with the U.S. by buying more American oil and gas.
And how important is the U.S.-EU trading relationship?
It's significant. The U.S. was the largest recipient of EU goods in 2023.
But there's a trade imbalance, right?
Yes. The U.S. had a goods and services trade deficit of $131.3 billion with the EU in 2022.
Finally, let's touch on crude oil prices. They're falling, and we're looking at potentially big weekly losses. What's driving this decline?
Several things. The strong U.S. dollar is making oil more expensive for buyers using other currencies.
Okay, so that's putting downward pressure on prices.
Right. And there are also concerns that the Federal Reserve's more hawkish stance on interest rates will slow down the economy and reduce demand for oil.
I see. Anything else?
We also have limited information on whether China will introduce further stimulus measures, and they are a major consumer of oil. And there are also signs of cooling U.S. fuel demand.
So that's adding to the downward pressure on oil prices. Got it. Okay, let's circle back to inflation. It sounds like that's really top of mind for the Fed right now.
Yeah, upside risks to inflation are definitely back on their radar.
And we saw U.S. consumer prices increase by the most in 7 months in November.
Right. And in response to that, the Federal Reserve has cut its forecast for additional rate cuts in 2025.
Down from 4 to 2, as we discussed.
Okay.
So we've got this key inflation indicator, the core PCE index, coming out soon. What kind of impact could that have?
Well, a stronger than expected rise could have a pretty big impact on the markets.
How big are we talking?
I mean, the November core PCE index is expected to rise 2.9% on an annual basis.
Okay.
And the monthly figure is expected to climb 0.2%. That would be a slip from 0.3% in October.
So the markets are bracing for potential volatility.
Definitely. U.S. stock futures actually retreated Friday ahead of the release of this data.
Makes sense. And on top of all that, investors are also worried about a potential government shutdown.
Yeah, sentiment has taken a hit after the failure of that Trump-endorsed Republican measure to fund the government.
The one that was supposed to fund the government for 3 months and avert a shutdown?
Right.
So where do things stand now?
Well, without a deal, a partial shutdown is set to start later Friday.
Not good.
And all eyes are on the release of the Fed's preferred inflation gauge, the core personal consumption expenditures price index.
Which, as you said, is coming out very soon.
Yeah. And this is all happening just a few days after the Federal Reserve indicated a slower pace of rate cuts in 2025.
So a lot of moving pieces right now.
A lot of uncertainty. And because of all this, the three main stock indices are on course for some pretty sharp weekly losses.
How sharp are we talking?
The S&P 500 and Dow Jones Industrial Average are down more than 3% week to date.
Wow.
And the NASDAQ Composite is off more than 2%.
Okay, so we've covered the PCE index and the potential government shutdown.
Mm-hmm.
What other economic data should we be paying attention to?
Well, aside from the core PCE, the main release is the University of Michigan's Consumer Sentiment Index.
Got it. And any specific companies we should be watching?
Keep an eye on delivery giant FedEx and sportswear retailer Nike.
Will do. Okay, let's dig a little deeper into this potential government shutdown. What exactly led to the failure of that spending bill?
Well, a partial shutdown of the U.S. government has become more likely after that spending bill backed by Donald Trump failed in the U.S. House of Representatives late Thursday.
Right. And this was after the prior bipartisan deal, the one supported by House Speaker Mike Johnson, was already rejected by President-elect Trump.
Exactly.
So why did this latest bill fail?
Members of the party's right flank refused to support a package that would increase spending. They're worried about adding trillions more to the federal government's $36 trillion in debt.
So we're at a standstill.
Pretty much. Government funding is due to expire at midnight on Friday.
So the clock is ticking.
It is. And if lawmakers can't extend that deadline, the U.S. government will begin a partial shutdown.
And what would that mean?
It could stop the pay for more than 2 million federal workers.
That's a lot of people.
It is. And Goldman Sachs estimates that each week of a shutdown would reduce quarterly GDP growth by 0.15 percentage points.
Ouch.
And then there'd be an equivalent rebound once the government reopens. And then there's this whole situation brewing between the U.S. and the European Union. A trade war is looking more likely after President-elect Trump threatened the EU with tariffs.
Unless they close their trade gap with the U.S. by buying American oil and gas.
Exactly.
This isn't the first time we've seen Trump threaten tariffs, is it?
Not at all. He's made similar threats against China, Mexico, and Canada in the past.
So how significant is this potential trade war with the EU?
Well, the U.S. was the biggest recipient of EU goods in 2023.
Really? I didn't realize it was that much.
Yeah, they accounted for almost 20% of EU exports.
Wow. And what about the trade deficit between the two?
The U.S. had a goods and services trade deficit of $131.3 billion with the EU in 2022.
Okay, so a pretty substantial imbalance there. And to wrap things up, let's go back to those falling crude oil prices.
Yeah, they're on track for some pretty hefty weekly losses.
What's the latest there?
Prices fell again on Friday. We're looking at weekly losses of around 3%.
And that's after the dollar surged to a 2-year high.
Right, after the Federal Reserve signaled they might not cut interest rates as aggressively in 2025.
So a stronger dollar makes oil more expensive for buyers using other currencies.
Exactly. And a slower pace of rate cuts could also dampen economic growth and reduce demand for oil.
What about demand from China?
Well, we still don't have a lot of details on whether they'll introduce further stimulus measures.
And they're a major player in the oil market.
Huge. And there are also those signs of cooling U.S. fuel demand we talked about earlier.
So all of these factors are weighing on oil prices.
They are. And when you combine that with the inflation concerns, the potential government shutdown, and the trade war threats, it makes for a very complex and unpredictable global market environment.
Definitely a lot for investors to digest.
Yeah.
It'll be interesting to see how these different factors play out in the coming months. Thanks for breaking it all down for us.
My pleasure.